Good morning. Hope you're having a fantastic day. Let's start a strategy session, huh? Any idea why I'm dressed like Michael J. Fox this morning? Welcome to Forex.Today. Let me remind you that trading and investing is risky, not appropriate for everyone, especially leveraged. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small and stay humble. Focus on the long term. Never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that is investing into your success today. In the hopes that when you do become a successful Forex trader, you will choose TradersWay as your prime broker, as your business partner. For many, many years that you're going to be profitable as a currency trader. Maybe it starts right here, right now, with this strategy session today. That's our goal. TradersWay allows traders access to Forex, as you would expect, but also energies, metals, indices, and binary options, and make your trading career complete. Yeah, so why the Michael J. Fox today? Well, in Back to the Future 2, Marty McFly, this character, travels to the future all the way to October 21st, 2015. Cool, huh? So keep your eyes out for Marty McFly. Interesting trivia, huh? Boom. Not a huge difference. He's Canadian, eh? Yeah. Yeah, that's what all Canadians look like. Seen one Canadian, you've seen them all. All right, so hey, let's get to the world of Forex. This is the USD yen trade that we made, I don't know, I can't remember now, Thursday. It's slowly moving up. It's amazing. It's a whopping 120 pips, and it's taken like almost a week, which for most people, that's a day's worth of work, not a week's worth of work. So it's just funny how slow it is, but they're all neutral. And we're just kind of getting to that point where we're almost to the, up to the resistance level. That's all it was, is up from support, maybe up towards resistance. And then what? I don't know. I would hope fundamentals take over, but timing of fundamentals is very difficult. Interesting, eh? Oh yeah. Keep me focused on that. Let me go through the charts, and we'll talk about timing issues. All right. So, anyways, you can see all it is going from the bottom up towards resistance, and that's where my limit order is. I'm only what, 30 pips, 40 pips, 50 pips. I don't know, something away from that. So it's not far. I'm not far off, eh? What's this all about? Oh, I guess if I'm going to do it that way. Oh, yeah, that was the daily 21, wasn't it? Let me zoom in. Yeah, we're up through the daily 21. Look at the oscillator around 50%. What that tells us is the market's neutral. That's how it's trading. All right, let's start with the Euro USD. Let's talk about Euro USD. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. So there's nothing going on. You know, let's see if I can go farther out here. Just, you can see, follow the line, right? This is where we are now, price-wise. You can follow the line across. It's just, very interesting place to be. And, it's like whatever you wanted to do, you probably have already done it, right? If you're a bear, you probably sold it near that weekly, or maybe you sold it off the 3A2. And you're probably wondering why it's not down here. And a bull, maybe you already, I don't know. It's just a very odd place to be trading it, don't you think? Whether you're a bull or a bear. It's not quite low enough to buy it. It's not quite high enough to sell it. Don't you think? Look at the pattern here. Higher high, lower low, stuck in the middle. Good place to be cautious, I think. Do you feel like you should be aggressive here? Like you should be, putting big money on this? Does this feel like the fish are jumping into the canoe? Yeah. So it's probably how I should be treated. Let me get rid of this stupid thing. How about British pound USD? Okay. Let's do a quick update. Where are we in the cycle here? Okay, this is indicating that I have a preference of down. Okay. So if it's got to fall, it's got to fall soon. On this chart, it doesn't seem like it's going to fall. Interesting. Let's take a closer look. I know. Someone said yesterday, lots of lines. I totally agree with you. There's a lot going on here. What I'm looking at is this high, okay, to this low, and then, so I'm going to do a fib in here. I know, lots of stuff going on. It's not good one way or the other, fib-wise, is it? You can see it's more than a 618, but not quite, but not a 786. Doesn't feel like a lot of money is going into the market because of a Fibonacci area. What it does seem like you could see I've predicted here, maybe a couple of days early, but you could see up for a while, retracement, and then up. So a bull, let me try to clear some of this out. You can see I already have this trade plan set up for you guys. A bull is looking to buy it off this bull reversal. Maybe that's what these lines were. Three areas where a bull would buy, here, here, and here. Well, if that's true, and I think it is, I think that's what the discussion was. If I move this across, okay, it's still an interesting area. And then, of course, to add to it, before I add, let me remove some of these fibs if I can. What are some of these things? Because some of these I want to keep. No? Sorry, talk amongst yourselves. All right, see, I want to keep this one. There's another set in there somewhere, and I want to get rid of it, but I don't want to get rid of the other one. It's not that. It's not that. It's not that. Oh, it is that. All right, let's get rid of that one. All right, so currently, even if I'm a bear, we got to be aware of our situation here. This is clearly an area to buy if you're a bull. Okay? And it's similar to all these other areas. This used to be resistance, right? Resistance, 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 resistance. Very often it's going to be support in the future if you're a bull. So any of this sideways action or retracement is an opportunity to buy. Okay? Another way that you would have it marked up is probably like this. And you can see we've already 382'd. But at some point, I'm hoping this goes bearish again, and that's where this gray area comes in. Okay, so to maybe draw this slightly different, an updated version would be a move like this. Okay. So let me move in here. So you could have a plan like down, up to resistance, okay, and then down again, okay, then failed rally, because the drop would be bulls taking profit, and then you got to get bears in, which would be this. And if we got something like this over the course of the next couple of weeks, right, then that would be bearish. And then you go up to a weekly chart, and what we're looking at is maybe something that could be significant, because we're just looking at this little tiny area here. And of course, we have to break all these old support zones, but come down to this purple area, which are already have as future support, but down to there, then up and then down. So we're talking even just to get down here is probably the end of the year. And what I think, and just sort of to reaffirm we're on the same page, what I think is going to happen is we'll get some dollar strength between now and let's say February. And that'll lead pound dollar down to this purplish area. But then we'll start to get, remember, the surprising data that's going to shock the world about the UK in about that February timeframe, and this idea that the Bank of England will be next at raising interest rates will then strengthen the British pound relative to other currency pairs, right? And then that pound will strengthen, and this currency pairing will basically move sideways. Okay. So that's British pound. Let's do a Kiwi update. How many people here trade Kiwi? Okay. There's an old plan, huh? You can see it's failed in the sense that I thought it would go up before and then go down, but it went down and now is heading up. It's still fairly plausible, though, don't you think? So, how about this? Remember, you should always decide whether you're a bull or a bear, right? What's your alpha, baby? Do you want this to go up or do you want it to go down? If you want it to go up, okay, I would treat this like a bottom. I would ignore the wick here. I'd treat this like a bottom, and I'd plan a 1, 2, 3. Okay. We're pretty close to that entry now, aren't we? And then this is also support, right? So you remember, if you're a bull, you need to identify two levels of support in which you might consider buying. Okay? Try not to do both. Pick a team. You're a bull or a bear, okay? One of the two. And then your trade plan, let's say if you're a bull, if you're an aggressive bull, you're going to look for something like this. Okay? And you would treat this like a double bottom. Double bottom, higher high, higher low, 1, 2, 3, off you go, HOTTOGO. Okay? And then this I will get rid of. Okay? And you would play it like this. Okay? So for example, if you bought this off of the technical pattern, you can see it's oversold. Okay? If it came down to this 200 EMA, remember the future 200 EMA, not the one now, and then rolled up. Okay, so this went back up. The market in this time frame would be bullish. Where would those bulls take profit? Right here. Okay. Okay, so if they take profit there, this comes down, and then if there's a failed rally to retest it and try again and it breaks, then now you have bears here. The first drop would be bulls taking profit. The second drop would be bears selling. So this is where one of these conversations like we've had on Commitment of Traders report, this first move down, this first wave, if you will, would be price falling, but nobody selling. There's a lot of people just have trouble with that concept. Nobody's selling, the bulls are getting out. You see what I mean? Here, nobody's getting out because they already got out. This is people selling. This is bearish. This is actually a little bit bullish, right? It's the bulls taking profit. So you got to kind of read into it. Which one do you sell? How many times have you sold on the left shoulder and then got knocked out on the double top, right? So let's pay attention to that, right? Okay. Now I want to put two more pieces into this puzzle, and then we'll move on to the next one. According to this oscillator, not the MACD, let's look at Stiggity Stokes. Come on, MACD. Let's get rid of smooth. Let's look at the Stokes. Has the retracement come to an end, or could this possibly fall for several more days? Okay. So in this case, I have two areas in which I've discerned that I might be interested in buying. Did I delete them on this time? I must have deleted them while I was chit-chatting. How funny is that? All right, well, let me do it again. I had the 382 highlighted, and I had the 618 highlighted. Just, it's the bottom, right, of that range. So I'm going to, like this. Okay. All right, so according to this, we're probably just beginning the retracement, not ending the retracement, right? Don't you think that this could fall for quite some time? It doesn't have to, but doesn't it make you think that we've just started the cycle down? And we're closer to the beginning of the retracement versus the end of the retracement. Okay. So if it was just the beginning of the retracement, it would just come down for one more day, hit the 382 and skyrocket. But it might come down to the 618. Well, this kind of feels like it's thinking more 618, doesn't it? That's one thought. Also, let me ask you something. If the 382 does act as support, what's the extension predicted by Leonardo Fibonacci? Based on Fibonacci theory, what extension would our target be if the 382 is our support? 1618. According to Leonardo Fibonacci, if 618 is the bottom, what's the predicted target? 1382. Thank you. So let's take a look. This target that I've pre-established by price action, let's go to a 4-hour now. I didn't use Fibonacci, did I? I just looked at price action. Let me try to get all this in. There we go. All I did was say bottom, 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 drag it across. It had nothing to do with the Fibonacci, if you remember, right? Then you overlap, you measure our move here. The 1382 is the extension. So in reverse, using reverse engineering, what is the probable retracement? If this is going to happen, what's the retracement, 382 or 618? Isn't that interesting? In a perfect textbook world, which is not the world we live in, but we can still use that to our advantage, maybe. That's what it might be suggesting. The 618 is the move that could occur. Down into in here. So you know what? Am I going to split hairs off of it? Yeah, you know, buy it at the 50%. How about that? Or just pay attention. And that's the way I like to look at it. I don't really care which one it is, but I have a lot of room to breathe. I have a lot of wiggle room on a daily chart. If I'm trading, you know, if we come down and touch the 382, and we're near the daily 21, and this oscillator is about halfway cycled, and I'm on a 15-minute chart, am I going to buy a stochastic cross up at the open of the New York session on a 15-minute chart? Or am I going to say, no, I can't possibly do it because my day chart? I'm still going to take shots, right? If we're here on Friday and a 15-minute chart gives me a good opportunity to buy, I should probably take it if I'm a bull. What do you stink? Smell like a plan? Everybody with me? Or ask a question before I move on. Cool. Dairy report. At some point, you know, at some point it doesn't matter because we already know. Is it a shock the dairy prices are down? No, no. The world already knows that. We've already adjusted. Okay. Remember, the markets trade on future anticipated changes, we already know the state of the dairy market. So what's more important is the potential improvement, not the continued deterioration, if that makes sense. So like my discussion about the British pound, I'm looking, how you say in English? The way that GDP is calculated, it requires data from the past, a certain amount of data from the past. The oldest data gets dropped off, the newest data gets added on, and I'm already anticipating the future data which hasn't been calculated, which hasn't been added on, but I'm also anticipating the past data which will get dropped off, and I'm looking at the positive differential of the two and adding them into the calculation to predict the future unexpected results. And therefore, the future anticipated results are more important than the past known data. That's what's going to move the market. But like the Eurozone having bad inflation, having negative PPI, like we didn't know that. So what happened to the euro when bad inflationary data came out this week? Nobody cares. Cares? We already know that. All right. Want to look at some Aussie? Right? So what do you want to do with Aussie? Got to make a decision, right? Is the down move over, or are you going to start buying it? Let's get rid of this. Well, no, actually, let's just save it. I like to recycle my fib studies. It's just the right thing to do, All right, there you go. If you're a bull, you're going to want to buy it soon. This is very similar to the Kiwi, isn't it? And do they have a high correlation, the Aussie and the Kiwi? If we thought the Kiwi was going to go up for a month, is it possible, or is it even likely, if the Kiwi goes up for a month, the Aussie also goes up for a month? Sure. So that's on a daily chart. Even longer term, however, do not lose the sight of the fact the market's still been bearish for quite some time. Okay? And you got to go even macro on this. And notice that this touch here for a bear is going to be important. That's a 382 Fibonacci retracement. If you're macro. Okay. If you're a bear, you should have played the top several days ago. And if you're a bull, you should be getting ready. Make sense? So what if this came down for a while and then went up for quite a while, and then, well, I don't know, near the end of December, for some reason, the US dollar gets super strong? Is that possible? Is that possibly in the house of cards for us? And why would that occur? Why would a pattern like that somehow occur? What would be going on? What would be going on here is, let's focus on the dollar. This drops for a week or so, and then in a week we find out the Fed doesn't raise interest rates. What happens to the US dollar only? It weakens. So between now and then, let's say it just kind of drifts down a little bit, and then no interest rate hike in October, so it goes up for, I don't know, 6 weeks. And then somewhere in December, the dollar starts getting stronger again, and then around the 20th of December, the Fed actually raises interest rates. And you get a sustained US dollar strengthening move. And we're just neutral on the Aussie. The RBA likes it at 70. And that's that. Is that a reasonable, plausible, potential outcome? If you think it's plausible and reasonable, you should plan it. Maybe that's what's already going on. Okay. Or you just trade the double bottom with a higher high, right, YJ? You're just like, I don't know all that other mumbo jumbo, but I know how to trade a 1, 2, 3 reversal pattern, right? And then what? Up to resistance. You're like, I don't know all that fundamental mumbo jumbo, but I know I'm supposed to sell at resistance. So let's take a look at our friend Kitty Cat. Okay. 786, which suggests it's going to have a lot of trouble making a higher high. So we're going to have to look the other way. And sure enough, we get a 786 on a 786. We call this fib wars. Should probably go neutral on this for a while. Because the bears are going to sell here, here, and here. The bulls are going to buy here, here, and here. And either way, you're going to lose money. Okay. Just wondering what else we got going on. You know, maybe we should do Beast. How many people trade the pound yen? The Widowmaker. Okay. So you don't mind that. All right. Okay. So I have this as a floor. Okay. What do you think? Was it an important level? Oops. Hate when I do that. And then where did it go? Guess this one. Yeah. Yeah, seems like it's been important. Well, it seems like if you bought it at support, now obviously this is probably impossible to catch on the actual move, but no matter how high it goes, what's the previous level of resistance? Right there. Okay. Lots of little micro moves, but then collapse. So if you're holding them, it's a problem, right? And then where are we on the cycle of things? Let me drag this further across because we know we're just clearing it here. Okay. Does this seem to be an important area? Yes or no? Yeah. Okay. Notice if you're trading it on the higher time frames, it's been following the 5 EMA quite nicely, hasn't it? If we call that a 618, it's expected to go to the 1382, which is actually the weekly R2, which puts us at 186.50, and we're at 185.50. So I'd say at best, between now and the end of the week, we have about 100 pips more to go, which isn't much for a pound yen, is it? Okay. And if you're a long-term bull, what would be interesting is to get this to the monthly R2, which would get us higher. So let me do it this way. Wouldn't that be neat if we did this? We went all the way up here, higher than this high, down to that roll reversal, and then long-term up next year. Double bottom, higher high, higher low. Well, a couple of things. It's taking a nap, right? But why? Well, one, Well, actually, instead of me doing it that way, let's talk about this. Where did this giant red candle come from? Kuroda told us that they're not thinking of doing additional quantitative easing at the end of the month. But you and I had already talked about it a week earlier, even a month earlier, that's what I expected. That when is it? It's like October 30th. I think there's a Bank of Japan meeting. Thank you, YJ. Yeah, the 30th. So, anyways, he basically said, no, they're not going to do that. But despite that, pound versus the yen has appreciated. Or the yen versus the pound has depreciated anyways. What does that tell you based on the market sentiment? The market's either very bullish on the pound or very bearish on the yen or both. So that could be a very interesting scenario. Okay, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, well, let's say 13 bullish days out of 14 days. So Wyatt says, well, they don't believe him. Well, what if the market simply wants to borrow cheap yen to buy British pound because, like me, they think in February or March the pound is going to appreciate in value? What if market participants are actually thinking 3 months in advance? If that's true, are they retail traders or are they professional traders? But I try to get you to think that way too. I try to get you to think like a pro, not just trade the 15-minute chart and you're like, oh, look at that oscillator. I think I'm supposed to go long now. Well, there should be more to it than that, right? So we're trying to talk about the ebb and flow. And then, so I did a video a month ago or maybe 6 weeks ago trying to explain how a professional would get to that point to make a decision on whether to buy the pound or not. Right? And maybe, maybe there's a PhD somewhere making the same decision. That even though the pound is falling, maybe there's a time they should buy it. Right? So if we break this purple area, have a sustained run, I think technically it's very important. And fundamentally, it's plausible that this all works out, that there's a reason, right? It's not just madness, it's method. Okay? So let's pay attention. And again, this all comes down to a GDP number at the end of the first quarter for the UK that's surprisingly good. Now again, think about that. 6 weeks ago, we talked about the end of the first quarter in the UK having shockingly good data and why. If we can talk about that, because now that's 6 months in advance. We're already thinking about UK first quarter GDP, then it's plausible somebody else is as well, right? And what was your conclusion for the Aussie versus the US dollar today? Are you going to sell Aussie US dollar? Where are you going to buy it? Okay. We're at a 786. You see this move here? The hourly wants to rise. 15-minute wants to fall. Okay. On this time frame, what you're measuring is this low to this high, and you're going to sell a Fibonacci retracement. And the role reversal is sort of in here. Okay. Ideally, if you're a bear, the 21 also holds on this time frame, right? Because it's not much of a trade plan to say it's going to come up to the 55 and then down. Right? But what happens on the hourly chart here? Say price drops a little bit and then we get into this area. Is that support? Okay. So you should probably not ignore that, right? What does this say? The bulls are waiting to buy? Okay. Also, look at it from this point of view as well. I'd probably bring this across as well if I were me. That's sort of in the middle of nowhere, isn't it? So if you were bullish and you're trading this like a 1, 2, 3, you want to buy it at 382, 50% or 618. So when you get down to these on higher time frames, like let's say this 4 hour, if price comes down to the 382, maybe you think it's there now or you think it's going to be there later today, you should drop into a smaller time frame, and if you get an opportunity to buy it, you should consider it and move your stop. So again, if you're bullish and you're going to trade this like a bull, identify 3 levels of support in which you might consider buying. For me, that could be 382, 50%, or 618. And then if you get there, you drop into a smaller time frame. On the smaller time frame, I've either already missed my opportunity to buy it at the 382, or we ain't going to the 382, right? So on the shorter time frame, it looks like this, and then down. Okay? But if you get a scenario like this later today, I might want to look for, like, maybe tomorrow, an inverse head and shoulders type thing. I guess I should draw it more like that, right? So this 382, if I'm a bull, I need to pay attention to, even though this is a 15-minute chart, right? What this is telling me is I can short it now for 2 hours, make a profit, get it down to the buy zone, this 382 area. At that point, the 15-minute chart will be oversold. And then I look at the hourly chart and it's ready to go. It's hot to go, HOTTOGO. Bulls are just waiting. What are they waiting for? congruency on the time frames. Okay? Does that make sense? So let the 15-minute play out until it's oversold, and it'll agree with the hourly, and you long bomb it here. My concern with it is we already had that opportunity and it failed. So it feels like a 618, but I don't care about how it feels, right? Yeah, it's a 10:34. You know what? I'm going to have to answer that tomorrow. I'm still sick and I'm out of energy and I have a headache and I just don't feel good. So I apologize for that. But I don't know. I don't like taking time off from work. I just don't have the energy. That's a Yeah, so let's just do that tomorrow maybe or Friday maybe, if that's okay. It's oil inventories day, so it might, that might be interesting for Kitty Cat. Do you guys want to look at oil? Oh man, all my oil charts are messed up. All right. Come on now, touch my baby. Oh, TradersWay added USD Mexican peso for us. And that allows us to trade the remittance trade. So maybe I'll teach you that someday if you're interested. Come on now, touch me, baby. Can't you see that I am not afraid? All right, here we go. Let's make this a little more purty. Let's do it this way. Boom. Snap. Okay, what direction is the price action going? And why are we getting a big green candle or a big red candle now? What time does the oil market open for trading? I'm gonna love you. Sorry, I just want to make sure I got it right. Oh man, this is my brain can't handle this. Anyways, I believe it opened already. I believe it opened 10 minutes ago. Is that right? Or is it 7:20? Oh, sorry guys. 5, 10, 15 minutes. Yeah, I used to trade this a lot more. I don't. It's funny, man. My brain just stopped working. But anyways, this is the right time of day to be trading oil. How about that? And the reason I say it's oil trading day is it's Wednesday, so at 10:30 we have oil inventories. Generally, an increase in supply will lower the value of oil. The value of oil has dropped by almost 2% today. And falling oil often weakens the Canadian dollar. Now, isn't that interesting? So if that's your alpha, if you see oil falling and you say, you know, this is all because it touched 50 and dropped, then you could perhaps trade this with Canadian dollars. So USD CAD should be going up, right? Because either falling oil prices will weaken the Canadian dollar, or maybe oil prices are falling because the US dollar is increasing in value, increasing the purchasing power parity and being able to afford more oil. Therefore, price of oil comes down because of a stronger dollar. One way or the other. But if you thought oil was falling and it was going to fall today, in particular because it's an oil trading day, then maybe your alpha is that this is going up. Okay? And at the very least, you see this 130 area as support. You're looking at it from this point of view on the hourly chart. Higher high, higher low, higher high, higher low, higher high, higher low, right? Okay? You're thinking this is the low of the week, right? Is that what you're thinking? I guess I should have it this way. Man, you know, I even have a headache. I don't get headaches. I don't get sick. Yeah, Rajesh, email me, all right? Wayne at fxbootcamp.com. Okay. So this is what you're thinking about. If you thought oil prices were going to fall, this is what you'd be trading in the near term, right? The here and now. I mean, you might not be looking at it from this point of view, but you might be looking at it from this point of view. Higher high, higher low, higher high, higher low, higher high, right? See, you could look at it, your point of view could be this way on a medium term view, right? And it's really, this is the way you're looking at it on the higher time frame. And then on the lower time frame, you're just looking at this higher high, higher low, higher high, higher low. And then this way you have congruency, but then you'd have to overlay the inversely proportional oil chart. Okay. Does that make sense? Okay. Any last requests? I have time for one more. Demeter, how would I possibly know? Oh, I'm sorry. Euro pound, really? Two people. I have to do it, I suppose. Two people have requested it. Let me give you full disclosure. You see on all my profiles, these are organized by USD, 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 USD. These are organized by yen, 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 yen. These are organized by euro, euro, euro. Swissy, 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 Swissy. And then I get here, euro pound. It's organized by plus minus. And it just comes down from the way that I trade. I don't trade euro pound. I'm not saying you can't. I'm just saying what I do or don't do. If I decide to buy the dollar, because I'm looking at all of these things and I think the dollar is going to be strong, or I'm looking at the dollar index and I see it going up and I want to buy dollar today. Which one do I sell first, euro dollar or pound dollar? Well, that's where this pair comes into place. That's why it's a plus minus. Right now, the pound looks a lot stronger than the euro, so I'd sell euro USD. Done. Do you understand the relative strength exercise? I've decided to buy dollar, which means I have to sell something else to buy the dollar. So I'm either going to sell the pound or I'm going to sell the euro, whichever is weaker in the moment. In this case, euro is weaker because euro pound is falling. Pound relative to the euro is stronger, or euro relative to the pound is weaker. So I say to myself, I want to buy dollar, and therefore I want to sell euro now in the moment based on relative strength. That's just how I trade. Now you could just sell euro pound, and this makes more and more sense under current conditions. But over the last 10 years, generally speaking, the euro and the pound had a strong correlation. Well, right now that correlation has changed, but over the long run, okay, over the long run, they used to do basically the same thing. If euro was strong, pound was strong. If pound was weak, euro was weak. It was just how it all had to do with global macroeconomics. If I thought the dollar was going to be weak today, I would look at this and say, buy pound dollar. Why? Pound is stronger than the euro, and for whatever reason, I thought today the dollar would be weak, so now I'm looking something to exchange my weak dollars for. Actually, anticipated weakening dollar, exchange it for something that at the very least isn't going to weaken as much, or maybe if I get this right, pound actually appreciates today, and I exchange my depreciating US dollars for an appreciating British pound, and now what happens is not only do I make money, but based on relative strength, I make more money than if I had bought something else. Now, if the US dollar is weak, there's a high propensity for the euro USD to go up, isn't there? Just in of itself, just because the dollar is weak. Now, we've seen this quite often recently, haven't we? Dollar's weak, euro dollar goes up. And we look at commitment of traders report, and nobody bought euro. And I said, well, isn't that funny? Euro USD went up, but nobody bought euro. Why is that? Well, traders are getting out of their long dollar positions relative to the euro, which pushes the euro USD back up. But what if people were actually buying British pound? Then in a scenario of selling US dollars, I could probably make more money buying pound dollar than euro dollar. So let's say I make 35 or 40 pips on euro dollar, and I'm like, hey, good trade, Wayne. You're such a genius. But I could have made 65 pips if I traded pound dollar. Why? Because the relative strength exercise, if I had done it, would have showed me that the pound dollar, because of the pound being stronger than the euro, the pound dollar would have gone up more. So I made 35 pips, but I bet on the wrong horse. Do you understand that? Neat, isn't it? And all I did was take the extra time to look at the relative strength of various things. But the most important part of this decision process is that I already decided to buy or sell the dollar. Then I looked at this to make the next decision. And do you understand that I've made decisions? I didn't look at this chart for a trade. I'm looking at it for relative strength to put it together in my trade plan. Simply having a trade plan is going to help me on the long run too, isn't it? Okay. And the same thing, you can see a lot of my pairs have to do with yen. Very same thing. If I wanted to sell the Japanese yen today, and you know I'm net short yen, so let's say I want to add to my net short position on Japanese yen, which one am I going to buy today? Pound yen or euro yen? Well, I'm looking at this chart. This is euro pound, 4 hour. So it's a pretty good chart. It suggests that I'm in a sell zone. It suggests it's overbought. Okay, it's a 382. That predicts a 1618. So at the very least, we're going to come down to, let's say, the weekly target. Okay, so at least a 1382. Monthly support 1, weekly support 2. So the beautiful cluster down here. So this would tell me if this pattern fulfills itself here on the euro pound, then the pound relative to the euro for the next 2 or 3 days will be stronger. The pound relative to the euro will be stronger if this pattern takes fulfills its destiny. And if that's the case, and I want to be short yen, then I should even though euro yen might go up, pound yen should go up significantly more. So if I did my analysis on this chart, I would buy pound yen if I thought the yen was going to weaken. And because I did this extra step, if this fulfills its destiny, I might make 50% more money. Someone might buy the euro yen and make money, but I'd probably make a lot more money because I bought a better pair. I sold a weak yen and I bought an appreciating currency with it. A currency that appreciated more than the euro did. And that's how I put that together. It's a funny thing how some people just sell the same currency pair every day. They just sell Euro USD every day. Or even worse, they sell it one day and buy it the next day and sell it the next day and then sell it the next day and buy it. And they're just swinging both ways like a broken gate. You know? Where I might look at this pound and say, well, for the next 2 days, I'm going to buy pound yen. And then when the euro pound retraces up off of the support area, that's the day I buy euro yen. But what's the, what am I doing there? I'm selling yen. I'll sell yen today, I'll sell yen tomorrow, or I'll not sell yen today, or I won't sell yen tomorrow because yen is strong. But I might be in the business of selling yen. And on days or hours or weeks in which the pound is falling, I'm buying pound yen. Euro pound is falling, I'll buy pound yen. And on retracements on the euro pound, I'll be buying euro yen. And I'll wait for those times. But at the end of the day, I'm building a portfolio. And that's the difference between sort of day trading and portfolio management. Right? That's the difference between shooting at rabbits and hunting big game. Oh, and by the way, don't forget, Ferrari is having their IPO today. So are you going to buy the RACE today? It's your opportunity to own Ferrari for $50. You say, I bought a Ferrari share today. I own a Ferrari share. Yeah, you can buy your first Ferrari. $50. Yeah, I'm thinking the same too, Stevie. So anyways, guys, I gave you 4 extra minutes, but I feel terrible. I'm gonna lay down and cry. So thank you for being on my team. You give me a reason to get out of bed when I don't feel good. Isn't that nice? It's because I care about you and I want you to succeed, even if it's uncomfortable for me. Well, look at it this way. Well, it's like, yeah, like you need us, right? Well, I have to get out of bed. I have to check the charts. I have to, so I'm here, right? If I had just said there's no reason for me to get out of bed, oh, if I get out of bed now, I'm going to make some bad trades. Have you ever done that? On a day you don't feel good, you get up and you make a whole bunch of bad trades? No, yeah, I don't know if I'm sick that way. What happens is I just go for so long without enough sleep, and then all of a sudden you just have a breakdown. I just love what I'm doing. I just, it's more exhaustion probably than anything, and then that makes you sick, right? So yeah, it happens. Yeah, I'm sure we've all been there. I'll have a bubble bath. I'll go get a shave and a haircut. I'll buy myself a nice new shirt, take a nap, and I'll feel really good. I'll smoke a cigar and do some Tai Chi. But anyways, we all done there. But in this case, I got to get out of bed, and because I don't want to let you down. So even on a day where maybe I'm not at peak performance, I still have responsibilities. I still have to get out of bed. I can't let you down. And therefore, I'm here, and I still need to check my positions. I still need to check the charts. I still need to set up tomorrow's trades today. I still have to bring as much A game as possible. And that's important on the long run. And that's, a big reason why I do these webinars for the last 10 years is that what can happen is one day at a time you become a little bit lazier, a little bit less disciplined, do a little bit less research, do a little bit more trading with instinct or gut, like Guy was saying the other day, right? And all of a sudden you find yourself in a rut and you're nowhere near as good of a trader as you used to be. Because each day you were a little bit less disciplined. Each day your trades were a little bit less refined and you did a little bit less of a trade plan. And then all of a sudden you wake up one day and you suck. And you're like, how did that happen? Well, you sucked a little bit yesterday and you sucked a little bit the day before, and all of a sudden, booyah, reality just hits in. You used to be a really good trader. Then you go down to the bar and you're drinking, right? I used to be a trader. Look, 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 right? It's a tough racket. Look, 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 look. Well, so you got to turn that whole negative reinforcing cycle around and add positiveness and harmony to your life. And you bring positiveness and harmony to my life. And I try to give to you because you give so much to me. So I thank you for that. So I say it every day. I hope you hear it. Thank you for being on my team. You make me a better trader, and I appreciate that. So, peace on earth. May the pips be with you. May your profits be above average, and I'll see you tomorrow. Cheers.